What is happening in the world of digital assets right now? The pace is absolutely unreal, and if you're not plugged in, you're missing out on history being made. Get ready for a rapid-fire update that's going to blow your mind, because the news cycle is spinning faster than ever, and we've got the must-know stories that will shape the future. You need to hear this, don't blink or you'll miss it. We're diving headfirst into the biggest developments, the moves that matter, and the insights you can't get anywhere else. Stick around, because this is the Bitcoin Bulletin, and we're about to break it all down. Let's go. First up, a major move in the public markets is set to redefine a key player in the digital asset space. We're talking about a significant business combination that's creating a brand new entity aimed at dominating the mining landscape. Get ready for the details on how this strategic alliance is poised to make waves and what it means for the industry's expansion. Then, we're shifting gears to explore the fascinating interplay between traditional finance and the burgeoning world of digital assets. We'll uncover how major institutions are not just dipping their toes in, but making strategic plays that signal a profound shift in adoption trends. You won't want to miss this deep dive into the forces shaping market sentiment and driving future growth. And you won't believe what's happening with liquidity in the crypto space right now. Is the tide turning? We're investigating a potential shift from the king of crypto to its loyal subjects, exploring whether a new era of altcoin dominance is on the horizon. Finally, we're looking ahead to the strategic financial decisions being made by corporations. What does it mean when major companies start treating digital assets not just as a speculative venture, but as a core part of their long-term financial planning? We've got the inside scoop on how this strategic allocation is setting the stage for future market dynamics. Don't go anywhere, hit that like button, subscribe, and ring that notification bell so you never miss an update. We're just getting started. A presidential endorsement hits the market. Get ready for a seismic shift in the digital asset mining sector as a prominent startup, backed by notable political figures, gears up for a major public market debut. This isn't just another company going public. It's a strategic move that could redefine the landscape of Bitcoin mining in the United States. American Bitcoin, a venture co-founded by Donald Trump Jr. and Eric Trump, has successfully secured the necessary investment for an all-stock merger with Gryphon Digital Mining. This significant business combination is slated to propel American Bitcoin onto the Nasdaq stock exchange, with the public listing anticipated in early September under the ticker symbol ABTC. The implications of this merger are substantial, aiming to create one of the largest Bitcoin mining operations in the nation. Following the completion of this transaction, a substantial portion of the newly combined entity will be held by key stakeholders. Reports indicate that the Trump brothers, alongside the Canadian crypto infrastructure firm Hut 8, are set to collectively own approximately 98% of the new company. Hut 8 itself is projected to hold a dominant share, around 80%, according to statements from Hut 8's chief executive, Asher Genoot. The crucial anchor shareholders necessary for this listing have already been confirmed, signaling a strong foundation for the company's public journey. American Bitcoin's ambitious vision extends beyond just mining. The company aims to establish itself as the preeminent Bitcoin miner in the United States. To achieve this, it is actively exploring strategic investments in digital asset firms located in key international markets, including Hong Kong and Japan, with the goal of expanding its global footprint. The choice to pursue a listing through a merger, rather than a traditional initial public offering, IPO, is a deliberate strategy designed to accelerate the company's access to capital markets, providing a more agile pathway to growth and expansion. This move not only highlights the increasing legitimization of the digital asset industry, but also underscores the significant capital and influence that can now be channeled into this rapidly evolving sector. The market will undoubtedly be watching closely as American Bitcoin embarks on this new chapter, potentially setting a precedent for future ventures in the digital asset space. But what does this mean for the broader market sentiment and institutional interest in digital assets? We're about to explore how major players are navigating the current market correction and positioning themselves for the future. Institutions are holding steady amid market swings. The digital asset market has been experiencing a period of significant volatility, with price corrections creating a complex environment for investors. However, amidst these fluctuations, a crucial trend is emerging: the resilience and continued adoption by institutional players. While retail sentiment can often be swayed by short-term price movements, the underlying behavior of large financial institutions suggests a deeper, more strategic engagement with digital assets, particularly Bitcoin. This sustained interest from institutional adopters is playing a pivotal role in maintaining market stability and mitigating the severity of downturns. The narrative surrounding Bitcoin's price resilience is intrinsically linked to the increasing integration of digital assets into traditional financial frameworks. The recent approval and subsequent performance of Bitcoin exchange-traded funds, ETFs, in the United States have been a game-changer. These financial products provide a regulated and accessible avenue for institutional capital to flow into the market, thereby increasing demand and supporting prices. Even when the broader market experiences a correction, the consistent inflows into these ETFs demonstrate a persistent belief in the long-term value proposition of Bitcoin. This institutional adoption isn't just about buying. It's about integrating digital assets into diversified investment portfolios as a strategic asset class, akin to gold or other commodities. Furthermore, the maturation of the digital asset ecosystem itself is contributing to this resilience. As regulatory clarity improves and infrastructure for custody and trading becomes more robust, institutional confidence grows. Companies are developing sophisticated risk management tools and compliance frameworks, making it easier for large firms to allocate capital without compromising their fiduciary duties. This growing professionalization of the market is crucial for attracting and retaining institutional interest. The ongoing development of Layer 2 solutions, improved scalability, and greater energy efficiency in mining operations also bolster the fundamental case for Bitcoin, making it a more attractive long-term investment. Analysts point to the fact that while speculative trading can lead to short-term volatility, the fundamental demand driven by institutional adoption provides a strong support level. This creates a scenario where the market might be less prone to the extreme boom and bust cycles seen in the past. The presence of these large, sophisticated investors acts as a stabilizing force, absorbing some of the shock from market downturns and preventing cascading sell-offs. Their long-term investment horizon means they are less likely to panic sell during temporary price dips, instead viewing them as potential opportunities to increase their holdings at a lower cost basis. This behavior is a clear indicator of a maturing market where digital assets are increasingly recognized for their potential as stores of value and hedges against inflation, rather than purely speculative instruments. The ongoing dialogue between regulators, financial institutions, and digital asset providers is further solidifying this trend, paving the way for even broader acceptance and integration in the future. But is this institutional embrace leading to a shift in capital flow within the crypto market itself? We're now going to investigate whether the spotlight is moving away from Bitcoin and towards its digital counterparts. Corporate treasuries realigning for the future. In a significant development signaling a maturing digital asset landscape, corporations are increasingly viewing digital assets not merely as speculative investments, but as a strategic component of their long-term financial planning and treasury management. This shift represents a fundamental reevaluation of how businesses can leverage innovation to enhance their financial resilience and growth potential. As companies look towards 2025 and beyond, the integration of digital assets into their balance sheets is becoming a deliberate strategy, moving beyond the initial exploratory phases into more concrete allocation decisions. This proactive approach suggests a growing confidence in the stability and utility of these assets, particularly Bitcoin, as a potential store of value and a hedge against traditional economic uncertainties. The rationale behind this strategic allocation is multifaceted. For many corporations, holding digital assets can be seen as a way to diversify their treasury reserves, reducing reliance on traditional fiat currencies or commodities that may be subject to inflation or geopolitical instability. Bitcoin, with its finite supply and decentralized nature, offers a unique proposition in this regard. Furthermore, companies are recognizing the potential for digital assets to facilitate faster, more cost-effective cross-border transactions, which can streamline global operations and reduce overheads. The underlying blockchain technology also presents opportunities for improved transparency and efficiency in financial record-keeping and settlement processes. As more established financial institutions and payment processors begin to integrate digital asset services, the infrastructure supporting corporate adoption continues to strengthen, making it more feasible and less risky for businesses to engage. This strategic pivot is also influenced by the evolving digital economy and the increasing prevalence of digital transactions. Companies that operate within or are adjacent to the digital asset ecosystem may find it strategically advantageous to hold these assets to facilitate partnerships, invest in emerging technologies, or engage with a customer base that utilizes digital currencies. The potential for significant long-term appreciation, as observed in historical market cycles, also plays a role, although the emphasis for treasury management is shifting towards stability and strategic utility rather than short-term gains. This long-term perspective is crucial. It indicates that corporations are building a strategy around digital assets that anticipates market cycles and focuses on enduring value creation. The increasing availability of regulated investment vehicles, such as Bitcoin ETFs, further lowers the barrier to entry for corporate treasuries, providing a familiar and compliant framework for investment. The implications of widespread corporate adoption are profound. It not only validates digital assets as a legitimate and valuable asset class, but also injects significant institutional capital into the market, potentially driving further price appreciation and stability. This trend could catalyze a new wave of innovation in financial services, as companies develop new products and services tailored to the needs of corporate treasuries. Moreover, it signals a broader acceptance of digital transformation within the financial sector, encouraging other businesses to explore the potential benefits of integrating digital assets into their operations. The move towards treating digital assets as a strategic asset allocation play underscores a forward-thinking approach to corporate finance, positioning businesses to capitalize on the opportunities presented by the evolving global financial landscape and the increasing digitization of value. But as corporations look to the future, a fascinating question arises about the current flow of capital within the crypto market itself. We're about to dive into whether Bitcoin's dominance is waning as altcoins gain traction. Altcoin season on the horizon, Bitcoin's grip loosens. Market observers are noting a subtle yet significant shift in the cryptocurrency landscape, with signs pointing towards a potential rotation of capital from the market leader, Bitcoin, into various altcoins. This phenomenon, often dubbed altcoin season, occurs when alternative cryptocurrencies begin to outperform Bitcoin in terms of price appreciation. Analysts like FX Pro's Alex Kupcykevich have highlighted this trend, suggesting that investors are increasingly moving assets into prominent altcoins such as Ethereum and Solana. This reallocation of capital is happening against a backdrop of Bitcoin's recent price pullback, which has seen it decline from its recent peaks. Kupcykevich's analysis is grounded in observable market data. Bitcoin has experienced a notable dip, falling approximately 9.7% from its all-time high and showing a 6% decrease over the past 30 days. In stark contrast, Ethereum has surged by an impressive 20.9% during the same period, while Solana has posted a more modest but still positive gain of 5.3%. This divergence in performance is also reflected in the flows into related financial products. For instance, while the iShares Bitcoin Trust, IBIT, saw only a 1% increase in its asset portfolio over the last month, its counterpart, the iShares Ethereum Trust, ETHA, experienced a substantial 25.5% surge in assets. This indicates a growing investor appetite for Ethereum compared to Bitcoin in the short term. Historically, Bitcoin's dominance, measured by its market capitalization as a percentage of the total crypto market, has been a key indicator. From late 2022 to mid-2025, Bitcoin's dominance steadily climbed, peaking at nearly 65% of the total crypto market. However, This metric has since retreated to around 57%. While still representing a significant majority, this decline suggests that altcoins are collectively capturing a larger share of the market's value. Other indicators, such as the Altcoin Season Index from CoinMarketCap, show a sideways trend, indicating neither a strong bull run for altcoins nor a complete Bitcoin dominance. The performance of the top 100 cryptocurrencies over the past year, which saw a collective gain of 79% compared to Bitcoin's 76%, further supports the idea that Bitcoin is not significantly outperforming the broader market average, a typical precursor to an altcoin rally. For a true altcoin season to materialize, fundamental shifts in the underlying blockchain networks are often required. Increased transaction volumes, growing developer activity, and wider real-world adoption of platforms like Ethereum or Solana could signal such a fundamental shift. While Ethereum shows positive trends in blockchain activity that align with its price performance, Solana's activity doesn't currently present the same clear indicators. If market makers are indeed basing coin prices on actual utility and network activity, then the current trends could indeed herald a genuine altcoin season, with Bitcoin benefiting from the overall market uplift, but at a slower pace than the leading smart contract platforms. The market's trajectory is complex, with traditional cyclical patterns suggesting a potential crypto winter before the next Bitcoin halving event in 2028. However, factors like the presence of Bitcoin and Ethereum ETFs and a more crypto-friendly regulatory environment might smooth out these cycles, leading to sideways or slightly upward price action for a couple of years. A significant altcoin season could emerge if decentralized finance, DeFi, and Web3 concepts capture the market narrative. Ultimately, for long-term investors, the strategy remains consistent. Buy the dips on fundamentally strong assets like Bitcoin, Ethereum, and Solana, and hold through market volatility for sustained wealth creation. With all these market dynamics at play, what's the big picture for corporate strategy in the digital asset space? We're now going to look at how companies are planning to strategically allocate assets for the future. And that's a wrap on another explosive episode of Bitcoin Bulletin. We covered a presidential-backed mining firm going public, institutional adoption holding strong, corporations strategically integrating digital assets, and the potential shift in liquidity from Bitcoin to altcoins. What a ride! Don't miss out on any of these critical updates. Hit that like button, subscribe to the channel, ring the notification bell so you're alerted the moment we drop new content. And let us know your thoughts in the comments below. You can also follow us on all social media platforms for real-time updates. We'll see you in the next one.